Is the housing boom over? Are we about to see a housing crash? According to the Wall Street Journal, there is a profit squeeze going on with mortgage lenders. A lot to do with rising interest rates, but also for the lack of or slowing demand of the home prices. Mortgage lenders are seeing a squeeze on their profits. A lot of this has to do with the fact that the cost of money, interest rates, have been rising over the last 90 days. In 2020, we saw 14.5 million people refinance their homes. It's a whole lot. And they got as low as 2.67% on their interest rate. That's like so cheap. But today, we're seeing interest rates rise. Look at the 5-year, the 10-year, the 30-year Treasury. Throw in the fact that the cost of goods are all escalating. So look at lumber prices, up 3 times what they were a year ago. Look at copper prices. Dollar devalues, commodities go up, copper goes up. Look at the cost of PVC piping or whatever. Everything has gone up in price, and now the cost of money has gone up. So the other day we went to my daughter's boyfriend's graduation, high school graduation, and he afterwards went to an after party, had a good time, and then Ginger and I wanted to go get a waffle, so we went to Waffle House. So we get to Waffle House and we walk in and half the place is blocked off. You can't sit in half the store. And she says, we're only taking to-go orders. What? To-go orders? And she goes, yeah, we don't have enough staff to run a full kitchen, and it's just the two of us, a cook and her. Oh, what happened? She goes, it takes 21 people to run a 7-day, 24-hour store. We have 10. And the person who's supposed to cover for me after this shift didn't show up. So now you have higher cost of goods, higher cost to borrow money, and a shrinking workforce. Because if you can stay at home and do nothing and get a paycheck, or go to work and maybe make $100 more before taxes, what are you gonna do? So I look at the housing market and I say, we're coming to the beginning of the end of this run. Here where I live on 30 Avenue, 30A in Florida, housing prices in the last 12 months have gone up like 25%. In the last 3 months, year to date, they've gone up upwards of 25%. But the problem they're running into is supply. They can't build them fast enough because everybody's leaving California, they're leaving the Northeast, and they're coming to the Florida Panhandle, or Florida in general. You've seen it with Goldman Sachs opening an office down in southern Florida. You're seeing the big hedge funds move down there. And a lot of it has to do with tax consequences. But here's the deal. If you do not have the supply and you do not have the people to build the supply, you're going to have a stagnation event. And that's what I believe is starting to rear its ugly head. Stagflation. So what is stagflation? Stagflation is very famously brought on by Jimmy Carter during the 70s, is where we have slowing growth and rising inflation and monetary policy that is, well, very concerned. Now, if you look at this housing boom, and now because the builders are looking at this going, well, if the cost of goods are going up, and I quote, say, here on this area, they're quoting $250 to $450 a square foot. Let's just say you get to a normalization of it and it's $100, $200 a square foot on a nationwide average. And in 90 days, your cost of goods are going to go up 20-30% because of the relationship of commodities to dollar. And this is just not in the United States. Every central bank around the globe has devalued their currency because they're raising debt to generate, to pay their bills. And in turn, they're putting more currency out there, which is deflating their currency. So this is just not a US phenomenon. This is global. And it's starting to work against them. So I tend to believe that the housing market is going to start slowing, but it's going to come in stages. And we're already seeing what those stages are. Number one, you got to follow the greed, right? The greed will tell you where everything is going. And right now, the lenders are getting squeezed on their profits. So, because there's demand still, shortage of housing, there's demand, the shortage of supply, they're willing to cut their profit margins to get that business. And they're undercutting each other. So, as they report second quarter earnings this year, they'll be probably profit-wise be substantially lower. Will the demand still be where it was, say, first quarter or fourth quarter? Maybe not so much, but you're gonna see that profit squeeze. And in the end, do you buy companies because they make money or don't make money? You buy companies because they make money. Well, if they aren't making as much as they were the previous quarter, what's gonna happen? Then the second phase will be because the cost of that mortgage loan goes up and people aren't getting raises that go up with it, you're going to see a slowing in the home builders. And they will be the second phase of this housing, well, crash. There's always a but, right? Yeah, but is the government going to allow this to happen? Are they going to allow the fall in housing? Are they going to allow the fall in the stock market? Because if you're a newly elected president, and you're all about the people and the people who got you elected, are you going to fail them? And failing them in the people's eyes is the housing market crashes, the stock market crashes. Are you going to allow that to happen? No, you're not. You're not going to allow that to happen. So what do? Well, the biggest group of new buyers coming in the system have not bought because they have one thing that's counting against them on a monthly basis, and that is the cost of their student loans. Now, I know it's just going to infuriate you, and I get it. But this isn't about you. This is about them and making sure they get reelected. So here's what I think is going to happen. You will soon see the forgiveness of student loans up to a certain dollar amount. For a lot of those people in that age 25 to 40 range, they haven't bought homes. They are new home buyers. So they will get a first-time home buyer's credit, and they will go out and take that money they were spending on student loans, and they will go spend it on a new home. And you will have another potential pop-up, vertical move up in housing. So if you're buying housing, if you're not buying housing, or if you're looking for a short option, you've got two possible ways where the housing market is going to go. But I have been through, three of these? You know, Europe, the failure there during Greece's debacle, the financial crisis, the 07-09, COVID recession, the tech crash, taking a little bit of long-term capital management's blow up, which wasn't really big. A lot of people don't know that actually happened, but it was significant. But what this is telling me is that we are getting to the beginning of the end of this run. And the whole idea was to get the economy going. But instead, what we have done is we've created a bigger wealth divide. We've created a bigger debt load. We're creating more dependency on government stimulus. And we're having a declining workforce. And because of COVID, a lot of those service jobs are going to go away because businesses are figuring out how to do things with less people. And the move in AI and robotics, we're going to see this is the turning point. Last year, in my opinion, was the turning point. But for me, what I'm looking for is an opportunity. My wife says I'm such an optimist. And I'm like, yeah, I run my life 80% optimistic, 20% pessimistic. And when I find pessimism or I am pessimistic, I flip it and I try to find the optimistic side of it. So where's the opportunity of investing in this? Well, in my opinion, it's still in commodities because the devaluing of the US dollar and really every currency throughout the world because of the printing of money, but also because housing is starting to weaken. We're starting to see, I know down here, you're looking at 9 to 12 months out before you can get in a new home that you start building today. So the length of time is going to wear on people. So my opinion is, where is the opportunity? It's on the short side. It's finding those lending companies, stage one, that have shrinking profits, that are going to report second quarter earnings, and they're going to say, yeah, maybe slow in new home sales because of the cost of a mortgage, and our profits are getting massively squeezed. Short opportunity. Second stage, housing, the builders, the mass builders. There's an opportunity there. Because once cost of goods gets so high, like lumber, copper, PVC pipe, cement, all those products get so high, people will not go buy that product because one, they can't because they don't have the income. Two, because the loan is, well, back to normal and they can't afford it. And three, the price is just too astronomically high. So home builders potentially will become a great short opportunity. And so you look at those companies, look for those opportunities. But are we there yet? No. This takes patience and time. We know what's happening. We see what's happening, the correlation between dollar to commodities, dollar to housing, all of this, to the mortgage rates. Those are what we plan for. We start to watch those. And at some point, we start to see hints or cracks in the foundation. We start to build a short position, which should never be in any one company more than 3% of assets under management. So that is my thinking, my strategy of where I think housing is going to go. And the optimistic side of me says, hey, I can capitalize on this because I see it consolidating. I see it starting to break down. And so I start to take a short position and I run my stops at a max, 7 or so percent above where I bought it. So if it works against me, I stop out. I can recover from a 7% loss over time. And I work with it and I follow the trend. So that's my ideas. That's my thoughts on housing. Take it for what it is. It's purely educational. It's not advice. Do your homework. Do your due diligence. But most importantly, go out today and live loud.